So the Bitcoin ETFs might have dumped over $500 million on last Thursday, pushing the price of Bitcoin under $60,000. But BlackRock made a very quiet but very interesting comment that I think not a lot of people have paid enough attention to. So we're going to be looking at what BlackRock's announcement actually suggests about Bitcoin and the coming bull market. But I first want to show you the chart that was on today's thumbnail, because this is showing you the flows in and out of the Bitcoin spot ETFs. And that big red bar is showing you that the outflows were absolutely enormous earlier in the week. They were huge. Have a look at the outflows that we saw. And this was the biggest outflow we've ever seen. We could see that the Bitcoin spot ETFs had a total net outflow of $564 million in a day. That's $500 million. And all of the experts came out, like Jim Bianco came out, and he's been fudding the Bitcoin ETF for a little while here. And as you can see here, is a pretty interesting tweet. He's quote tweeting Eric Balchunas. And obviously, Eric has made the point for a long time that he doesn't think that, the ETF outflows are going to be dramatic. Like, he's saying, yes, there's some retail investors buying the Bitcoin ETF, but he doesn't expect the outflows to be as bad as Jim Bianco does. So as you can see here, there's a big long tweet thread. I'd encourage you guys to go and read it. You get to see some of the greatest minds in the space debate their ideas on Twitter pretty frequently. So it is a great app if you are trying to learn more about Bitcoin or see opposing sides of different arguments. But again, you can see the chart doesn't lie. The chart is massive. They're massive outflows. Jim Bianco highlights it accurately, and he says, how about now? Quote tweeting Eric, because Eric said a day before, amazing, we haven't seen more outflows yet. Very interesting. I love the debate. But I think what's been missed is what BlackRock quietly said. Okay, so here again is a different chart showing you the outflows, but here's very interesting, because the head of digital assets for BlackRock, Robbie Mitchnick, said something very, very interesting, extraordinarily interesting. He said the coming months could see the financial institutions such as sovereign wealth funds, pension funds, and even endowments start to trade Bitcoin spot ETFs. Okay, this is massive. And this is kind of what I wanted to talk about a little bit more, because as you can see, everybody was talking about this news. Okay, it's big, it's happening, and it looks as if the damn wall is breaking. Okay, even though we have had this record broken. Okay, we did see 71 straight days of inflows into the Bitcoin spot ETFs. This was recently broken, but Robbie Mitchnick, the head of digital assets at BlackRock, again, excuse the dirty word, digital assets. We would prefer it would just be the head of Bitcoin. But he obviously knows probably a little bit more about the flows and what's happening behind closed doors than we do. Okay, so he says here, many of these interested firms, whether we're talking about pensions, endowments, sovereign wealth funds, insurers, or other asset managers and family offices, are having ongoing due diligence and research conversations. And we're playing a role from the education perspective, okay? So the education is still continuing. The conversations are still continuing, even though the BlackRock and the other Bitcoin ETFs have been launched for a very, very, very long time now, okay? We've been live for months and months and months. Now, while we're talking about sovereign wealth funds, let's kind of pause for a minute and just consider, okay, how big are sovereign wealth funds? If Robbie Mitchnick, head of digital assets at BlackRock, is saying that they're coming, how big is it? How much money can we expect? Well, let's have a look at this. This is the total size of the sovereign wealth fund market in the world. You can see that all these different countries have different size sovereign wealth funds. So it looks as if China has a $1.2 trillion sovereign wealth fund, Kuwait, 700 billion, Abu Dhabi, 649 billion. So you can see there's some seriously big ones around the world. 545 billion in the Singapore sovereign wealth fund and 581 billion in the Hong Kong sovereign wealth fund. We're going to talk more about Hong Kong, Japan, and all of Southeast Asia in a live stream tomorrow. But again, very interesting. Okay, there's a lot of money. There could be tens of trillions of dollars on the sidelines coming into Bitcoin. Okay, now to put that into perspective, BlackRock, the world's largest asset manager, is around $10 trillion in size. Just looking at the largest, sovereign wealth funds, we can see if you add up the top 20 or the top 30, you've probably got $10 trillion as well. Okay, so very, very interesting. There's a lot of money coming. We got Bill in the chat. Michael Saylor agrees there will not be another ETF. I might try to find you the video quickly for Michael Saylor, where he was very, very staunch and direct and said, like, look, Bitcoin's got an ETF. The rest, they don't have a good chance of getting an ETF. Okay. Very interesting words that Michael did put out there. So thanks for bringing that up, Bill. We have people tuning in from Austria. I think we have Austria and Austin. That's funny. Very, very interesting. I think that's the first person I've seen tune in from Austria. So welcome, Patori. Let's move on. I want to show you guys something that is very, very interesting. Extraordinarily interesting. Some of you might have seen it already. You know what? When I'm going to show you the video now anyway. So this video here was going viral over the weekend. I'm just going to play it for you guys without
that money by selling
conclusions about
the U.S. government can't go bankrupt because we can print our own money.
This guy here, Jared Burns.
It obviously begs the question, why exactly are we borrowing?
His title just ran away from me. He's the chair of the Council of Economic Advisors for President Joe Biden, personally selected. So let's listen to him, and surely, let's just be enlightened with his grace about monetary policy and economics. And, let's listen to the man who runs economics in the country of the US. We could learn something.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do?
Is that what they do?
They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, cause it's like,
well, there you go. He said it. I don't know. I don't get it. I don't know what they're talking about. This is the head of economic advisors for Joe Biden in America. Okay. Do you really feel comfortable holding US dollars? We're currently running wartime deficits, $1 trillion deficits every single year. And this is the brilliant man who's in charge of economic policy in America. Just another reason to opt out with Bitcoin. And again, let's talk about MMT and Keynesian economics for just a moment here, because some of you guys might notice this lady here, Stephanie Kelton. Okay, she is obviously one of the most prominent modern monetary theorists. She's even written a book titled Why Deficits Don't Matter. Okay, government deficits don't matter, according to Stephanie Kelton. And all of the MMTs over the past 100 years and all these Keynesian economists, they've always pointed to Japan. And they've said, look, Japan has 260% debt to GDP ratios. Japan hasn't defaulted on their debt yet. Look at this great example. The world can just pile up debt, print our own money, buy the government bonds, and can't we all just turn Japanese? Like, that's a term you hear a lot of people talk about, okay? A lot of people say, oh, America would just turn Japanese. I don't think so. I really don't think so. I think one of the few macroeconomic analysts who really calls this out is people like Luke Groman and Lynn Oldham. They say, no. America's a little bit more like Argentina, not Japan. So why do they use that example? Well, some of you guys might know. Maybe we haven't talked about it on the channel. But if you look back since the year 1800, so the past 220 years of economic data, there have been 52 governments who have reached debt to GDP levels of above 130%. Okay. And out of those 52 governments, 51 of them ended up defaulting within 15 years of them reaching that 130% debt to GDP threshold. Okay. So today we have America, all the pigs nations in Europe, Portugal, Italy, Greece, Spain. There's around 12 or 13 national governments around the world who have breached that Rubicon, and they're over 130% debt to GDP ratios. And if history tells us anything, we have a 98.6% probability that these governments are going to default within 15 years, okay? So the last time I looked, it was in 2020 when America hit it. So if history repeats, America, as well as all of these other 13 countries, should default on their debt before 2035. And normally a government default looks like very high inflation and or hyperinflation, because that's how you default on your debt. That's how governments pay back their debt. They just print their own dollars, devalue their own dollars, pay back their debt with the devalued dollars. Okay, but so that's a little bit of history, right? But the MMTers have always pointed to the one example, Japan, who hasn't yet defaulted on their debt, and they have debt to GDP ratios of 260, 270% today. And they said, oh, if Japan hasn't suffered from hyperinflation or defaulted yet, the rest of the world can just turn Japanese. I don't think so, okay? If we have a look at this chart here, we can see what's happening to Japan right now. They're actually in the middle of a currency crisis, okay? If you have a look, this is the Japanese yen measured against the dollar, and it's lost 50% of its purchasing power since 2020, okay? So is this what it looks like when we all turn Japanese? Okay. Again, I just wanted to really call this video out and add a little bit of color to this video, because it's gone absolutely viral this week. This video of Stephanie Kelton and Biden's economics advisor, it went very, very viral. Okay. So again, I wanted to add some color about MMT there. And I want to show you one more thing, because we've obviously talked about, watching what BlackRock is saying, not what they're doing, okay? So we can see here, let's not forget. So BlackRock is saying that sovereign wealth funds are coming, okay? Just early in the year, we talked about this, but BlackRock said they plan to acquire spot Bitcoin ETPs for their global allocation fund, okay? So again, they've got a $36 billion fund. They've got another $18 billion fund. And BlackRock is very quietly opening the floodgates to sovereign wealth funds, endowments, and they're quietly putting Bitcoin into all of their other global funds that they have. Okay, so again, that's a little bit of signal. Don't be scared by the charts. Okay, yes, the charts can be a little bit scary. We did have a massive day of outflows, but we did see a massive day of inflows the day after we saw these outflows. Okay, we saw an enormous day of inflows, actually. We actually saw even Grayscale saw inflows for the first time ever. Okay, have a look at this chart here. As you can see here, the day after we saw those massive outflows, we saw massive inflows from everyone. And even Grayscale saw $63 million of inflows. Okay, so the whales are accumulating Bitcoin. Everybody's accumulating Bitcoin. As we talked about earlier today, on my personal YouTube channel, if you missed it, Mr. 100 is accumulating Bitcoin. So Mr. 100 just bought 4,200 Bitcoin on Thursday, the day we dipped below $60,000. So again, buy the dip. Don't be scared. Don't listen to the doomers. Bitcoin has lots of bull market corrections. This is very, very normal for Bitcoin to see these kind of bull market corrections. We've had a nice 24% correction. Who knows where the price of Bitcoin is going to go? But again, buy the dip, buy Bitcoin. And with all that said, guys, I have better go, because I don't know if you guys can see it or not, but I got an Uber in 2 minutes. The girlfriend and I are going to go and get a massage, or as you say in Spanish, a masaje. So thank you so much for everyone who tuned in. We'll see you in another live stream on Monday, and enjoy the rest of your weekend. With all that said, Buy the dip, ignore the FUD, and have a great weekend.